Silent Money, written and published by Rich Audiobooks. The most powerful wealth builders share a distinctive trait. They move in silence. While others broadcast their financial aspirations on social media or boast about their latest investments at dinner parties, these quiet accumulators focus their energy on methodically building their portfolios. They understand that every moment spent talking about wealth is a moment not spent creating it. This silence isn't born from secrecy or shame. It stems from a deep understanding of human psychology and wealth dynamics. When we verbalize our financial goals or share our investment wins, we trigger a premature sense of accomplishment. Our brain releases dopamine, creating the same satisfaction we get from actually achieving our goals. This psychological short circuit can dampen our drive and determination, making us less likely to follow through on our wealth-building activities. The collectors understand this principle intuitively. They've learned that money grows best in the dark, like a seed taking root beneath the soil. They recognize that financial success requires intense focus and dedication, qualities that flourish in silence rather than in the spotlight. While others seek validation through likes and comments, these quiet accumulators find satisfaction in watching their account balances grow and their investments compound. Their approach extends beyond mere discretion about numbers. These people rarely discuss specific investment strategies or financial milestones. Instead, they channel their energy into research, analysis, and execution. They spend evenings studying market trends rather than crafting perfect Instagram captions about their trading successes. They invest time in building relationships with knowledgeable mentors rather than amassing followers who validate their financial choices. Lesson 1. They don't talk. Just collect. This silence serves another crucial purpose: protection. In a world where information travels at the speed of light, financial privacy becomes increasingly valuable. The quiet accumulators know that broadcasting their wealth or strategies can attract unwanted attention, from unsolicited investment pitches to outright security risks. They understand that true wealth often grows best when shielded from the public eye. The collectors also recognize that talking about money changes relationships. When people know about your financial success, interactions can become tainted with expectations, jealousy, or ulterior motives. By keeping their wealth accumulation private, they maintain authentic connections and avoid the social complications that often accompany visible success. Instead of sharing their journey, they document it privately. They maintain detailed spreadsheets, investment journals, and personal records that track their progress. This private accountability proves far more valuable than public validation. It allows them to learn from their mistakes, refine their strategies, and celebrate their wins without external pressure or interference. Perhaps most importantly, these silent accumulators understand that wealth building is a personal journey, not a performance. They don't need an audience to stay motivated or validation to know they're on the right path. Their conviction comes from within, fueled by clear goals and unwavering focus rather than external approval. This approach requires tremendous discipline in our sharing-oriented culture. The temptation to post about a successful investment or share financial milestones can be strong. But the collectors have learned that the energy required to resist this urge is far less than the energy wasted on managing the consequences of oversharing. The path of silent accumulation might seem lonely at first, but it leads to a unique form of freedom. While others remain trapped in cycles of showing and telling, the quiet collectors focus purely on building and growing. They understand that in the realm of wealth creation, actions speak louder than words, and silence often speaks loudest of all. Lesson 2. They buy real estate, not Rolexes. The path to enduring wealth is paved with assets that appreciate, not depreciate. While a Rolex might turn heads at dinner parties, real estate turns modest investments into generational wealth. Smart money moves silently into properties, while others chase status symbols that lose value the moment they leave the store. Consider two people who each have $50,000, 0 cents to invest. The first purchases a luxury watch, dreaming of the admiration it will bring. The second makes a down payment on a rental property in an up-and-coming neighborhood. 5 years later, the watch has scratches and has lost 30% of its value. Meanwhile, the property has appreciated, generated rental income, and built equity through tenant-paid mortgage payments. Real estate creates multiple streams of wealth simultaneously. Your property can appreciate in market value while providing monthly cash flow. The mortgage paydown builds equity, and tax advantages shelter your income. These benefits compound while you sleep, requiring no social media posts or validation from others. The wealthy understand this multiplication effect and choose investments that work in silence, around the clock. The true power of real estate lies in its leverage potential. Banks will lend you money to buy property at historically low interest rates, something they won't do for watches, cars, or designer clothes. This leverage multiplies your returns when property values rise. A 20% increase in property value can translate to a 100% return on your initial investment when you've used financing strategically. Those building serious wealth often start with modest properties in solid neighborhoods. They focus on cash flow and appreciation potential rather than impressing others with luxury finishes or prestigious addresses. Many begin with small multifamily units, learning the fundamentals of property management and tenant relations before scaling their portfolio. This approach builds both wealth and valuable experience without drawing attention. The wealthy also understand that real estate offers unique privacy advantages. While luxury goods broadcast your financial status to everyone you meet, property ownership can be structured through LLCs and other entities that protect your privacy. Your tenants never need to know you're the owner. Your neighbors never need to know how many properties you own. This anonymity creates space for quiet wealth accumulation without social pressure or unwanted attention. Real estate investing rewards patient, methodical growth over flashy purchases. Each property acquired becomes a stepping stone to the next, creating a snowball effect of equity and cash flow. Smart investors reinvest their returns instead of diverting funds to depreciating status symbols. They understand that every dollar spent on luxury items is a dollar that could be building long-term wealth through property appreciation and rental income. The stealth wealthy approach real estate as a business, not a status symbol. They calculate cap rates, analyze market trends, and make decisions based on numbers rather than emotions or social approval. Their properties might not be the most impressive at first glance, but their portfolio's performance speaks volumes. They're more interested in net operating income than granite countertops. Time reveals the wisdom of choosing real estate over luxury goods. Watches need servicing, cars need maintenance, and designer clothes go out of style. But well-chosen properties can appreciate for decades while generating steady income. The low-key wealthy focus on assets that grow stronger with time, not weaker. They understand that true wealth builds quietly through smart investments, not loudly through conspicuous consumption. The real estate mindset represents a fundamental difference between those who build wealth and those who display it. It's about choosing appreciation over depreciation, cash flow over status flow, and long-term growth over short-term validation. The next time you're tempted by a luxury purchase, consider instead how that money could work silently in your real estate portfolio, building wealth while others chase fleeting status symbols. Lesson 3. They're invisible in luxury. True wealth moves silently through the world, like a shadow at dusk. The genuinely affluent understand that luxury isn't about being seen, it's about experiencing quality on their own terms. They've mastered the art of understated affluence, choosing items and experiences that deliver genuine value rather than social validation. These people recognize quality through craftsmanship, not logos. They select items based on durability, functionality, and personal satisfaction rather than brand recognition. Their watches might be worth thousands, but you'd never know by looking. They're chosen for precision engineering and generational longevity, not for their ability to catch eyes across a room. Their clothing is tailored perfectly but bears no visible markers of status. The fabric, fit, and finish speak volumes to those who understand quality, while remaining pleasantly unremarkable to those who don't. In high-net-worth circles, these quiet wealth builders navigate with tactical anonymity. They understand that being the loudest voice in the room often signals insecurity rather than success. Instead, they listen more than they speak, observe more than they showcase, and learn more than they lecture. Their presence in luxury spaces is marked by their comfort with understatement. They don't need to announce their arrival because their confidence and competence naturally command respect. The invisible affluent have mastered the art of selective luxury. They might drive a modest car to their private aviation membership or wear basic attire to their exclusive club. They understand that true luxury is deeply personal. It's about creating experiences and owning items that enhance their lives rather than their image. Their homes might contain museum-quality art, but visitors would never know unless they possessed the knowledge to recognize it. Their wine cellars might hold rare vintages, but they're shared only with those who appreciate the wine itself, not its price tag. These people have discovered that invisibility in luxury offers a unique form of freedom. When you're not bound by the expectations of displaying wealth, you're free to allocate resources based on what truly matters to you. They might spend significantly on personal growth, health, or family experiences while maintaining a modest external appearance. This approach allows them to move through the world without the burden of maintaining an image or meeting others' expectations of how wealth should look. The strategy of invisible luxury extends beyond personal choices to business and investment decisions. These wealth builders often prefer private deals to public displays, quiet partnerships to visible ventures, and understated business premises to gleaming corporate towers. They understand that attention can be costly, both in terms of actual expenses and opportunities lost. By staying under the radar, they maintain the ability to move quickly, negotiate effectively, and preserve their privacy. This invisible approach to luxury creates a powerful compound effect over time. While others exhaust resources maintaining appearances, the quiet wealthy focus on accumulating assets and experiences that truly enrich their lives. They develop an eye for value that transcends price tags and social approval. Their wealth becomes a tool for living rather than a burden of proof, allowing them to operate from a position of genuine security rather than perpetual display. The most sophisticated practitioners of invisible luxury have learned to appreciate the irony of their position. The less they try to appear wealthy, the more genuine wealth they tend to accumulate. They've discovered that true luxury lies not in being seen as affluent, but in having the freedom to choose invisibility. In a world obsessed with displays of wealth, their ability to move unnoticed through the highest levels of luxury becomes perhaps their most valuable asset of all. Lesson 4. They let assets introduce them. The most powerful introductions aren't made with words, but with results. Low-key wealth builders understand that their assets should do the talking, creating ripples of influence that naturally draw opportunities their way. While others rush to announce their ambitions or broadcast their success, quiet wealth architects let their portfolio speak for itself. Approach. This approach manifests in multiple ways across business and personal relationships. When a silent wealth builder enters a room, they don't need to mention their real estate holdings or investment success. Their reputation has usually preceded them through the natural network effects of their accomplishments. Their properties generate passive income and appreciation. Their businesses solve real problems and create genuine value. Their investments compound quietly in the background. These tangible results create an organic narrative far more compelling than any self-promotion could achieve. Consider how differently opportunities unfold for those who let their assets speak first. When seeking business partnerships or investment opportunities, they don't lead with grand promises or status signals. Instead, they can point to their track record of successful projects, their portfolio of performing assets, or the stable cash flow from their ventures. This evidence-first approach attracts serious players, while naturally filtering out those more interested in appearances than substance. The practice extends beyond financial assets to intellectual and social capital as well. Silent wealth builders invest heavily in their knowledge, skills, and relationships, assets that appreciate over time and speak volumes about their capabilities. Their expertise becomes evident through their questions and insights rather than claims and declarations. Their network grows through genuine connections and value creation rather than strategic name-dropping or social climbing. This asset-first approach also creates a powerful feedback loop. As their investments and ventures succeed, they generate not just returns but also credibility and opportunities. Each successful project becomes a silent ambassador, opening doors to new possibilities without the need for active promotion. Their reputation for solid execution and quiet competence becomes an asset in itself, attracting like-minded people and opportunities that align with their values. The beauty of letting assets do the introducing lies in its sustainability and scalability. While those who rely on personal promotion must constantly maintain their image and narrative, asset-based credibility builds upon itself with minimal active management. A well-chosen portfolio of investments, businesses, and skills continues to generate value and create opportunities even when its owner isn't actively networking or promoting. This principle applies equally to those just starting their wealth-building journey. Rather than waiting to accumulate significant assets before adopting this approach, they begin by focusing on building valuable skills, making sound investments, and creating genuine value in their chosen field. They understand that small wins, consistently achieved and properly reinvested, gradually build into significant assets that will speak on their behalf. Smart wealth builders also recognize that different assets serve different introductory purposes. Some assets, like specialized knowledge or unique market insights, open doors in professional contexts. Others, like carefully chosen real estate investments or successful business ventures, establish credibility in investment circles. The key is maintaining a diverse portfolio of assets that collectively tell a compelling story about one's capabilities and judgment. The ultimate goal isn't to remain completely anonymous, but rather to let accomplishments precede personality. When others discover their success through the natural revelation of results rather than deliberate disclosure, the impact is far more powerful and lasting. This approach aligns perfectly with the philosophy of silent money, letting wealth accumulate quietly while its effects speak volumes. Those who master this principle find themselves in an enviable position where opportunities seek them out rather than the other way around. Their assets become a magnetic force, attracting high-quality connections and opportunities while naturally deflecting those more interested in appearances than substance. In the world of silent money, this organic, asset-based credibility becomes one of the most valuable assets of all. Lesson 5. They skip show-off culture. In a world obsessed with displays of wealth, the truly prosperous often choose a different path. They recognize that show-off culture is not just a financial drain, it's an emotional and psychological one that diverts energy from genuine wealth building. This conscious rejection of status-seeking behavior marks a critical turning point in the journey towards substantial wealth. The most successful wealth builders understand that every dollar spent on maintaining appearances is a dollar that could be compounding in their investment portfolio. They've witnessed countless peers fall into the trap of lifestyle inflation, where increasing income leads to proportionally increasing displays of wealth rather than actual wealth accumulation. These displays often manifest as luxury cars parked in driveways of mortgage-to-the-hilt homes, designer wardrobes funded by credit cards, and lavish parties that drain resources rather than build them. What's particularly insidious about show-off culture is its self-perpetuating nature. Once someone enters the arena of competitive consumption, they often find themselves trapped in an endless cycle of one-upmanship. Today's status symbol becomes tomorrow's baseline, creating a treadmill of spending that never leads to actual financial progress. Silent wealth builders observe this pattern and consciously step off this treadmill, redirecting their energy toward activities that compound their wealth rather than deplete it. The decision to skip show-off culture often requires finding or creating new social circles. Quiet wealth builders tend to gravitate toward others who share their values, people who measure success by their investment returns rather than their Instagram followers. These relationships often prove invaluable, as they provide both emotional support and practical knowledge exchange without the pressure to maintain appearances. Instead of seeking validation through visible consumption, these people channel their competitive energy into wealth-building activities. They might become obsessed with maximizing their savings rate, optimizing their investment strategies, or identifying undervalued assets. This redirection of competitive spirit often yields far greater returns than any temporary satisfaction derived from status signaling. The freedom from show-off culture also creates mental space for more strategic thinking about wealth. Without the constant pressure to maintain appearances, these people can focus on long-term financial planning, risk management, and opportunity identification. They develop a clearer perspective on what truly matters in their financial journey, uncluttered by social expectations or peer pressure. This rejection of show-off culture doesn't mean living like a miser or avoiding all luxury. Rather, it means making conscious choices about where to direct resources based on personal values rather than social pressure. Many quiet wealth builders still enjoy high-quality experiences and possessions. They simply do so without the need for external validation or social media documentation. The most powerful aspect of skipping show-off culture is the compound effect of this decision over time. While others drain their resources maintaining appearances, silent wealth builders channel that same energy into assets that appreciate. They understand that true wealth isn't about what you can show others, it's about what you can build for yourself and your future generations. What's fascinating is how this approach often leads to greater respect and influence in the long run. While flashy displays might attract immediate attention, sustained financial success coupled with modest behavior tends to command genuine admiration. This authentic respect comes not from what these people display, but from what they've built, a legacy of sustainable wealth that speaks for itself. Lesson 6. They spend quietly, stack loudly. The most powerful wealth builders understand that true financial growth happens in spreadsheets, not shopping malls. While others chase the temporary high of visible spending, these quiet accumulators experience a different kind of rush, watching their investment accounts grow month after month, year after year. These people have mastered the art of strategic spending, allocating resources with surgical precision rather than emotional impulse. They understand that every dollar directed toward productive assets rather than depreciating goods becomes a soldier in their wealth-building army. Their spending patterns reflect careful consideration of long-term value rather than short-term validation. When they do spend, it's often on experiences that enrich their lives or investments that compound their wealth, rather than items that broadcast their financial status. The psychological satisfaction they derive comes from watching their assets stack up in silence. They experience genuine excitement when reviewing their investment statements, seeing their real estate portfolio appreciate, or calculating their net worth growth. This internal scorekeeping creates a powerful feedback loop that reinforces their wealth-building behaviors. Unlike the fleeting dopamine hit from a luxury purchase, the sustained pleasure of watching investments grow creates lasting motivation to continue their disciplined approach. These quiet wealth builders have developed their own metrics for success, ones that often differ dramatically from conventional status symbols. They measure progress in portfolio diversification, passive income streams, and compound growth rates, rather than car models or watch brands. Their excitement comes from reaching investment milestones that most people wouldn't even recognize as significant, like achieving a specific debt-to-equity ratio or hitting a target monthly dividend income. The power of their approach lies in the mathematical reality of compound interest. While others drain their resources on depreciating assets and status signals, these people redirect their capital into vehicles that multiply over time. They understand that money spent on status is money that can't be invested, and they've done the math on what that really costs over decades. A $50,000 0-cents luxury car purchase, invested instead at 8% annual return, becomes nearly $250,000 0-cents in 20 years. This is the kind of calculation that guides their decisions. Their quiet spending habits often extend to their businesses and professional lives. They reinvest heavily in their companies, knowing that business equity typically generates higher returns than personal consumption. They focus on building robust operations and strong balance sheets rather than flashy offices or expensive business accessories. This disciplined approach to capital allocation often accelerates their wealth accumulation far beyond their more visible peers. The satisfaction they derive from watching their wealth stack up creates a virtuous cycle. As their assets grow, their confidence in their approach deepens, making them even less susceptible to social pressure to spend conspicuously. They develop an almost meditative pleasure in reviewing their financial progress, finding deep satisfaction in the growing gap between their actual wealth and others' perception of it. These people have discovered that the real thrill of wealth building isn't in the spending, it's in the stacking. They experience genuine excitement in watching their investment theses play out, seeing their carefully chosen assets appreciate, and observing their wealth compound in silence. This shift in perspective transforms wealth building from a series of consumption decisions into a fascinating game of strategy and patience, where the scoreboard is private but the rewards are profound. Lesson 7. Their wealth is quiet, their peace is loud. True wealth whispers in the stillness of a mind unburdened by financial anxiety. The low-key wealthy understand that the greatest luxury isn't a tangible possession, it's the intangible peace that comes from knowing your financial house is in perfect order. This peace manifests in subtle ways, sleeping soundly without money worries, making decisions based on value rather than necessity, and experiencing a profound sense of calm about the future. The quietly wealthy have mastered the art of building stress-free money systems that operate in the background of their lives. They've created automated investment structures, passive income streams, and strategic asset allocations that work while they rest. This systematic approach eliminates the constant mental chatter about money that plagues so many people, replacing it with a steady confidence in their financial foundation. Their peace is evident in their daily choices. While others frantically chase deals or obsess over market fluctuations, the low-key wealthy maintain their composure. They've built substantial emergency funds, diversified their investments, and structured their lives so that no single financial setback could derail their stability. This financial buffer creates a psychological safety net that allows them to move through life with remarkable equanimity. The contrast between their quiet wealth and loud peace becomes apparent in how they handle opportunities and challenges. When markets dip, they don't panic. They often see it as a chance to acquire more assets at better prices. When unexpected expenses arise, they handle them without drama or public discussion. Their emotional stability during financial storms speaks volumes about the depth of their wealth without ever mentioning a dollar figure. This inner peace translates into authentic relationships and meaningful pursuits. Free from the constant pressure to maintain appearances or impress others, they can focus on what truly matters to them. They engage in hobbies because they enjoy them, not because they signal status. They choose friends based on genuine connection rather than financial networking potential. Their wealth serves as a foundation for living rather than a source of identity. The quiet wealthy have discovered that financial freedom isn't about having the ability to buy anything. It's about reaching a point where money decisions no longer create emotional turbulence. They've built their wealth in a way that supports their desired lifestyle without dominating it. Their investment strategies are designed to generate consistent returns without requiring constant attention or causing sleepless nights. Perhaps most tellingly, their peace manifests in their ability to be generous without announcement or expectation. They can help family members, support causes they believe in, or invest in opportunities that align with their values, all without needing to broadcast their contributions. This quiet generosity flows from a place of genuine abundance rather than a desire for recognition. Low-key wealth builders understand that true financial success isn't measured by the reactions they generate from others, but by the stillness they cultivate within themselves. They've created a life where their wealth works silently in the background, while their peace resonates loudly through their actions, choices, and relationships. This internal harmony becomes their most valuable asset, one that appreciates over time without requiring external validation or public display. In the end, their wealth speaks through their serenity. It's visible not in what they own or display, but in how they move through the world, confident, calm, and unburdened by the financial anxieties that often accompany the pursuit of wealth. They've achieved what many overlook in their rush to accumulate, the profound peace that comes from having enough and knowing it's secure, growing, and working in harmony with their values and goals. Lesson 8. They build in silence, shine in freedom. True wealth builders understand that freedom isn't just another word for nothing left to lose. It's everything left to gain when you build without broadcasting. The most successful quiet millionaires share a common trait. They create their empires in silence, allowing themselves the space and focus to make decisions unclouded by external opinions or social pressure. This approach to wealth building isn't about being secretive, it's about being selective. When you're constantly announcing your moves, you're inadvertently inviting judgment, unsolicited advice, and the kind of attention that can derail your progress. The energy spent managing others' perceptions is energy stolen from your wealth-building journey. Silent builders channel all their resources into actual progress rather than progress reports. The freedom to build without announcement creates a powerful psychological advantage. Without the pressure to maintain appearances or justify decisions to others, you can pivot quickly, take calculated risks, and weather temporary setbacks without external scrutiny. This mental space becomes particularly valuable during market downturns or when exploring unconventional investment opportunities that might raise eyebrows in your social circle. Consider the difference between two investors, one who broadcasts every stock purchase on social media and another who quietly builds a diversified portfolio. The vocal investor becomes trapped by their own narrative, often feeling pressured to stick with losing positions to save face. The silent investor can adapt their strategy based purely on market conditions and personal goals, free from the burden of public consistency. This silence-first approach extends beyond investment decisions. Quiet wealth builders often develop their skills, expand their knowledge, and build their business relationships away from the public eye. They understand that premature exposure can kill promising opportunities. By the time others notice their success, they've already built robust foundations that can withstand scrutiny and competition. The freedom that comes from building in silence manifests in unexpected ways. Without the constant need to document and share their journey, wealth builders can focus on what truly matters: the quality of their decisions, the efficiency of their systems, and the long-term sustainability of their wealth-building strategies. This focused approach often leads to better outcomes and faster progress than those achieved by their more visible counterparts. Silent builders also benefit from the power of surprise. When you build without fanfare, your eventual emergence carries more weight. People respect what they discover more than what they're told about. The quiet millionaire who suddenly appears with a game-changing business opportunity or a market-moving investment tends to command more genuine respect than those who've been telegraphing their every move. The ultimate reward of building in silence is the freedom to shine on your own terms. Without early exposure, you can choose when and how to leverage your success. This might mean using your wealth to create opportunities for others, investing in causes you care about, or simply enjoying the peace that comes from financial independence without the burden of public expectation. The path of the silent builder isn't always easy. It requires confidence in your vision and the discipline to stay focused when others are seeking validation through visibility. But the freedom to build and grow without external pressure creates space for the kind of deep, meaningful wealth that transforms not just bank accounts, but lives. In the end, those who build in silence don't just achieve wealth. They achieve the freedom to use that wealth exactly as they choose, unencumbered by the expectations they never created. Lesson 9. Their house doesn't scream rich, but their books do. The most fascinating aspect of low-key wealth builders is their prioritization of intellectual capital over material displays. While their homes might appear modest from the curb, their personal libraries often tell a different story, one of calculated investment in knowledge rather than superficial status symbols. These quiet millionaires understand that the true measure of wealth isn't found in marble countertops or luxury car collections, but in the depth of their financial education and business acumen. Their bookshelves overflow with well-worn volumes on investment strategies, market analysis, and business principles. These aren't pristine, untouched books for show. They're highlighted, annotated, and repeatedly referenced, serving as the foundation of their wealth-building journey. The contrast between their modest living spaces and rich intellectual pursuits reflects a fundamental truth. Knowledge appreciates, while appearances depreciate. While their neighbors might invest in expensive furniture and flashy renovations, these strategic wealth builders allocate significant resources to courses, seminars, and educational materials that compound their earning potential. They recognize that a $500 0-cents investment course might generate hundreds of thousands in returns, while a $500 0-cents designer lamp simply gathers dust. This philosophy extends beyond traditional financial education. Their libraries often span diverse subjects: psychology, technology, history, and innovation. They understand that cross-disciplinary knowledge creates unique insights and opportunities in the market. A deep understanding of human behavior might inform their real estate investments, while technological literacy could reveal emerging market trends before they become mainstream. Many successful wealth builders maintain what they call their million-dollar library, a curated collection of resources that have directly contributed to their financial success. These might include obscure investment newsletters, private market reports, or specialized industry analyses that the average person never encounters. While their kitchen might feature basic appliances, they don't hesitate to invest thousands in premium financial data services or exclusive business intelligence subscriptions. The power of this approach lies in its multiplier effect. Every piece of knowledge gained becomes a tool for generating more wealth, creating a self-reinforcing cycle of learning and earning. Unlike physical assets that require maintenance and depreciate over time, intellectual capital compounds and becomes more valuable as markets evolve and competition increases. While they often create dedicated learning spaces in their homes that would put many corporate training centers to shame. While their living room might feature modest furnishings, their home office or study might house sophisticated research tools, multiple monitors for market analysis, and comprehensive archives of financial data. This contrast perfectly encapsulates their priority. Investment in knowledge extends to their children's education as well. Rather than lavishing their kids with expensive toys or trendy clothes, they focus on building strong financial literacy from an early age. Their children might drive used cars, but they have unrestricted access to educational resources and mentorship opportunities that will shape their financial future. The irony isn't lost on these wealth builders. Their modest homes often contain more real wealth-building potential than their neighbors' showcases of apparent affluence. While others invest in granite countertops and smart home systems, These quiet accumulators invest in knowledge that generates perpetual returns. Their houses don't scream rich because they're too busy housing the intellectual capital that actually creates and maintains wealth. Through this focused approach to intellectual investment, low-key wealth builders demonstrate that true affluence isn't about what you display, it's about what you know and how you apply that knowledge. Their homes might turn heads, but their financial results speak volumes about the power of prioritizing education over appearance. Lesson 10. They invest in privacy, not popularity. In an age of oversharing, privacy has become the ultimate form of wealth protection. The most successful wealth builders understand that financial discretion isn't just about modesty, it's about security, strategy, and sustainable growth. They recognize that popularity often comes at the cost of vulnerability, while privacy creates a fortress around their accumulated wealth. The wealthy who maintain their privacy understand a fundamental truth: attention attracts both opportunity and predators. Every social media post about a new purchase, every casual mention of an investment win, and every visible display of financial success creates a digital breadcrumb trail that can lead to unwanted scrutiny. Instead of broadcasting their wins, they focus on strengthening their position through careful, unannounced moves in the market. Privacy-focused wealth builders employ specific strategies to maintain their low profile. They use trusts and legal structures to shield their assets, conduct business through entities rather than personal names, and carefully compartmentalize their financial information. They understand that wealth preservation is just as important as wealth creation, and privacy serves as a crucial shield against both opportunists and unnecessary risks. These people also recognize that privacy extends beyond legal structures. It's a lifestyle choice. They choose where they bank, who handles their investments, and which professionals join their inner circle based on discretion and trust rather than prestige or social connections. Their attorneys, accountants, and financial advisors are selected not just for their expertise, but for their ability to maintain strict confidentiality. The digital age has created new challenges for privacy-minded wealth builders, but they've adapted accordingly. They use secure communication channels, avoid discussing financial matters on social media, and are cautious about their digital footprint. Many opt out of public records where legally possible and maintain minimal online presence for their business activities. Smart wealth builders understand that privacy isn't about paranoia, it's about creating space for optimal decision-making. When fewer people know about your financial moves, you face less pressure, fewer unsolicited opinions, and reduced risk of emotional decision-making based on others' reactions. This privacy creates a clear mental space where wealth can grow undisturbed by external noise. These people also recognize that privacy helps maintain valuable relationships. When wealth is visible, it can strain friendships, alter family dynamics, and attract superficial connections. By keeping their financial status private, they ensure that their relationships remain authentic and based on genuine connections, rather than monetary interests. Perhaps most importantly, privacy-focused wealth builders understand that true financial success doesn't require social validation. They don't need likes, comments, or shares to confirm their wealth-building strategies are working. Their growing asset statements tell the only story that matters. This freedom from social proof allows them to make decisions based purely on value and long-term benefit rather than immediate social impact. The investment in privacy often yields returns that go beyond financial metrics. It provides peace of mind, operational freedom, and the ability to move through life without the burden of managing others' expectations or reactions to your wealth. While others chase followers and influence, these people focus on building and protecting their wealth with the power of privacy as their ally. This approach to wealth building represents a fundamental shift from the popular narrative of success. Instead of leveraging wealth for status and attention, these people leverage privacy for security and sustained growth. They understand that in a world where everything seems to be for show, the ability to build wealth quietly isn't just an option, it's a competitive advantage. Lesson 11. Flying under the radar. The most successful wealth builders often operate like stealth aircraft, employing sophisticated technology and careful planning to remain undetected while achieving their mission. They understand that visibility can create vulnerability, and unnecessary attention can disrupt their wealth-building trajectory. These quiet achievers have mastered the art of social camouflage. They drive reliable but unremarkable vehicles, maintain modest social media profiles, and participate in their communities without drawing attention to their financial status. Their strategic invisibility isn't about deception, it's about effectiveness. They recognize that every moment spent managing others' perceptions of their wealth is a moment not spent building. The radar-dodging wealthy often cultivate what might be called strategic averageness. They may live in nice neighborhoods, but not the most exclusive ones. They frequent quality establishments, but not necessarily the trendiest spots. Their children attend good schools, but not always private ones. This careful calibration allows them to enjoy life's comforts while avoiding the spotlight that often accompanies obvious displays of wealth. Their professional lives follow similar patterns. Many operate successful businesses that serve steady markets rather than flashy industries. They prefer reliable, long-term contracts over high-pressure projects. Their companies might occupy modest offices in practical locations rather than prestigious addresses. These choices aren't about limiting success. They're about maximizing it through reduced overhead and operational efficiency. Social dynamics play a crucial role in flying under the radar. These people often maintain diverse friendships across economic spectrums, never allowing wealth to define their relationships. They participate in community events based on genuine interest rather than networking potential. Their charitable giving, while potentially substantial, is often anonymous or quietly directed through foundations and trusts. Technology and privacy management have become increasingly important tools for the radar-dodging wealthy. They use sophisticated security measures to protect their digital footprint, carefully manage their online presence, and often employ professional services to maintain their privacy. They understand that in today's interconnected world, information about wealth can travel faster than the wealth itself. Financial privacy extends to their investment strategies. They often work with discreet wealth management firms, use trust structures to shield assets, and maintain banking relationships with institutions known for client confidentiality. Their investment portfolios might be substantial, but they're structured to minimize public disclosure requirements while maximizing long-term growth potential. The art of flying under the radar also involves careful information management. These people share financial details only with trusted advisors and immediate family members who need to know. They teach their children the value of privacy and the importance of maintaining a low profile. Family wealth discussions focus on stewardship and responsibility rather than privilege and status. Perhaps most importantly, these wealth builders understand that flying under the radar isn't about fear or shame. It's about creating space for effective wealth management and personal freedom. They recognize that true financial success often comes from the ability to move through the world unencumbered by others' expectations or demands. By maintaining their privacy, they protect not just their wealth, but their ability to live authentically and purposefully. The radar-dodging wealthy haven discovered a secret formula. They've simply recognized that attention and wealth often move in opposite directions. By choosing privacy over publicity, substance over show, and effectiveness over ego, they create an environment where wealth can grow naturally and sustainably, protected from the turbulence of public scrutiny and social pressure. Lesson 12. Low-key is the new luxury. In a world obsessed with conspicuous consumption and social media displays of wealth, a profound shift is occurring. The truly sophisticated have discovered that low-key living isn't just a style choice, it's the ultimate form of luxury. This revolution in wealth expression reflects a deeper understanding that true abundance lies not in what we show, but in what we know and own. The new luxury paradigm centers on freedom, choice, and control rather than visible markers of success. It manifests in the ability to move through the world unburdened by others' expectations or the pressure to maintain an image. Those who embrace this philosophy understand that the real power of wealth lies in the options it provides, not the attention it attracts. Consider the difference between someone who must coordinate their outfit with their luxury car and someone who can travel anywhere, invest in any opportunity, or say no to any obligation without concern for appearances. The latter represents true luxury, the luxury of choosing based on personal values rather than social pressure. This freedom from external validation becomes increasingly precious in an age of constant digital performance. The low-key approach to luxury also provides practical advantages. When wealth isn't obvious, it's easier to negotiate better deals, maintain authentic relationships, and move through the world without the burden of managing others' expectations or requests. This invisibility becomes a form of protection, allowing wealth to grow undisturbed by the friction of public attention. Privacy itself has become a rare commodity in our hyper-connected world. The ability to maintain personal and financial privacy now represents a form of luxury that money alone cannot buy. Those who master the art of low-key living gain access to an exclusive world where decisions can be made based on personal choice rather than public perception. The most sophisticated expression of wealth today isn't about what you display, it's about what you can choose not to display. It's about having the confidence to let your actions and choices speak for themselves without the need for external validation or public recognition. This shift represents a mature understanding that true power lies in the ability to operate freely and effectively without drawing attention. Modern luxury is increasingly defined by experiences and capabilities rather than possessions. It's about having the means to pursue knowledge, health, and personal growth without constraint. It's about being able to say yes to opportunities that align with your values and no to those that don't, regardless of their status value. This form of luxury creates a compound effect, where personal freedom and wealth reinforce each other in a virtuous cycle. The low-key wealthy understand that the greatest luxury is the ability to live life on their own terms. They recognize that true abundance is measured not in the things they accumulate, but in the choices they can make. This perspective transforms wealth from a tool of display into a means of achieving personal sovereignty. As we move forward, this quiet approach to luxury will likely become even more valuable. In a world where privacy is scarce and attention is cheap, the ability to maintain control over one's public profile while building real wealth becomes increasingly precious. The future belongs to those who understand that low-key isn't just an aesthetic choice, it's a strategic advantage in the pursuit of lasting wealth and personal freedom. This evolution in how we think about luxury marks a return to more substantive values. It recognizes that the most valuable things in life often can't be photographed or posted on social media. True luxury lies in the freedom to choose, the power to act, and the wisdom to know that the quietest path often leads to the most significant rewards.